is Tuesday, and we're now at September 20th, 2022, about 8:25 a.m. Central Time. Well, we had a rally yesterday, and that's given ground. And, you're going to get this schizophrenic action now in the marketplace. We're in the two-day meeting of the FOMC. The market's going to see evening up one way or the other, new positions going on, as traders try to figure out what they want to do, going into the report or being neutral outside of it. Metal markets, basically a lower day except for the platinum market. Dollar surging again, up 45 points. Most currencies dropping against it, as you can see. We have a number of central banks, by the way, this week that will be looking at their meetings. We've got the UK, we have Japan, we have Brazil. There's just a lot. We had the Swiss bank today come out, the Risks Bank, and they raised by a whopping 1% their key rate. And that's the biggest one-time move in 30 years. So that gives you an idea how people are fighting inflation. In the grain market, wheat up a little bit, beans down, and you're in that schizophrenia time of these markets because we saw yesterday how the planting progress, well, not planting, but now the crop progress is actually going. And I didn't see any improvement in the bean or the corn. I saw that the market is getting closer to maturity. Corn's maturity is ahead of schedule, which means I would say we're no more than full swing harvest going 10 days, probably something in that area. Cotton still feeling the pressure as the crop progress showed that crop's doing well. Look at bonds and notes. They just keep adding to rates. I don't know if you're aware of it, but this morning early on in the 2-year note, we were 3.98%, just getting close to that 4% rate. I happen to think it's going to about 4.5%. And from there, I think that's where the core inflation is. I don't think it's going to move much beyond that. So I'm looking for that to still climb a little bit here before it's all said and done. Now, as I said, we have a lot of data, by the way. The Fed's two-day meeting. U.S. housing starts and building permits. And this was a bit of a shocker this morning. The starts went up 12.2%. Nobody was looking for that. They were looking for 3.7. That's almost 3.5 times what the market was looking for. What's the logic there? Well, maybe the builders are just saying, if I start now, that home maybe will be ready within 9 months, something like that. I'll catch the spring-summer market where there's good demand. We don't have a lot of houses. The one thing you can count on, you don't have a lot of supply of homes. And you'll ask, well, why aren't home prices falling? Well, they're not going to if you don't have a lot of supply. You may not sell as many, and you may get some people that go, well, I do want to move my home, and I'll play with price a little bit. But as for a big amount droppage, I'm just not seeing it, especially with good employment. Permits were down 10%, so you can see they're not going to get things into the first stage. They're backing away from that, the builders. Red Book sales, well, they're no longer at 12%. They're slipping a little bit, still good. We get the API numbers out this afternoon. The Bank of Japan meets tomorrow. As I said, Sweden's Risks Bank made its 1-point move. And Canada, their August inflation fell to 7%. Versus an estimate of 7.3%. But the real elephant in the room, you know what it's going to be. It's going to be tomorrow at 1 o'clock when we get to see what the Fed's going to do. The market is still overwhelmingly looking for 75 basis points, not 100, but 100 is on the table. So could you get a surprise here? Well, you absolutely could. And I'm going to cover that. I'm going to cover what these markets do, when they do it, in two different ways. And this is time for you, now that the trading season is back, join me. 5:30 in the morning, I start recording and covering 40 some odd futures markets. Live charts, not static, going right as you see it. I review with you the fundamentals of the day, what's come out, what to be looking for, entry, exit spots, with showing the charts. I'll mix it up with daily charts and weekly for the longer term. Then, right afterwards at 9, I start recording the Spider ETF charts, about 42, 43 of those. giving you, again, talk some technical analysis, trade recommendations. Now I've got more data to talk about what's going on for the fundamentals and where I think you should be with the markets. So in the futures, we're going to cover all these different areas and back them up with not only stocks, we cover quite a few stocks, but these ETF categories all the way through in the SPDR ETFs. So we get you going for the day. You see what I'm seeing in the chart action. You decide, hey, does that help me with my decision making? Inexpensive. You're spending more on your Starbucks daily than this is going to run you by a lot. Remember, I said daily what you're spending. Mine is for a month at a time. The comparison, it's not even there. How do you find out more? It's simple. Go to our website under the word research, or just follow my finger. Take it right up here on your cursor. When you're there, you will see an icon appear. Click it. It'll take you right into that section. I'm Ira Epstein. Look forward to you joining me. You have a great trading day.